been a rough little go for Bitcoin. I'm
Yeah.
definitely feeling it. I have a pretty big allocation to Bitcoin, which I've had for quite some time. It's been a wonderful investment, and Bitcoin is still right up there for me, despite that drawdown. But a lot of people are definitely focused right now on the drawdown. If I look in the past month, it's down around 20%. And I think from the peak, it's probably down around 30%.
I'm feeling it, not as much as you, clearly. I find a lot of
Yeah.
people, when Bitcoin goes down by 10 or 20%, you get a lot of people out of the woodwork, but they ignore the 450 some percent run it's gone on over the last 3 years. It's still been a very good asset over the last while. Actually, I think it's like the best performing asset over the last decade at least, but you have to be comfortable with the volatility. I
Oh,
think
for
when I
sure.
bought it
Yeah.
back in 2021, I think I was underwater like 60% very quickly, but I'm glad I held on.
Yeah. Even if you bought it at the peak in 2021, you're still up probably around 35, 40%, which is
Yeah.
not the worst. The markets are up probably a bit more since, but it's just a reminder here. And it's funny how many people will take victory laps in the moment. The last thing I didn't mention is Bitcoin's actually down for the year now. So it's down about 4.5% for the year. Obviously, it's going to be very volatile. I'm measuring it in US dollar just because it's the most constant measurement that's used for Bitcoin. But there's a few reasons for that, probably a combination of them. The first one is large liquidation. So billions in leverage long positions wiped out over the past few days and weeks. And traders tend to be very leveraged, much higher leverage rates than stock investors that would be on margin. When Bitcoin swings, especially downwards, and people are long the asset and they're using leverage, they could be using like 10, 15, 20x leverage. So it doesn't take much to get wiped out. That will exacerbate the selling pressure because you have a whole lot of forced sellers. You're also seeing ETF outflows and weak spot Bitcoin demand. So if you're looking here from the blog.co, if you start looking, they have spot Bitcoin ETF flows, and you see there's some strong outflows coming here. Just looking at November 13, they had some outflows that were approaching $1 billion when you combine all of the ETFs together. And that was the worst day in the last 3 months.
God, that's crazy. And I think Ethereum is taking an even bigger pounding, is it not? Isn't it down like almost 40%, I think?
Could be, yeah. It
Since,
usually
yeah,
swings a bit more than
yeah.
Bitcoin. Macro risk off environment, and this will apply to some of the stocks or that we'll be talking about, is higher for longer rate expectations. We're seeing that now with the Fed, that there's, I think, about 50-50 chance the last time I looked for a rate cut in December, when it used to be close to 80-90% before the previous rate cut. Signs of slowing economic growth is probably causing some investor to de-risk, although those signs have been there for a little bit of time. This is nothing new.
Yeah.
And as much as I think long-term Bitcoin will do well, I place it in the hard asset category because it can't be created out of thin air. But the reality is that many investors still see it as a risk asset and trade it as such. So you have to keep that in mind, and you have to remind yourself, like, why are you owning Bitcoin? Are you trying to make a quick buck, or are you owning it because you believe in the asset and you believe it as a good store of value on a long-term basis? Because short-term, if you're putting too much of your eggs in that one basket, you'll get your face ripped off. So you have to keep that in mind. And maybe on the macro front, and I don't know what you think about that, but maybe you're starting to see now the lag effect of the tariffs that the US put. Maybe you're starting
Possible.
to see that hurt households in the US and spending in the economy. Those effects that we thought would be coming sooner, that could be another reason.
Yeah, because you had Home Depot report earnings a few days ago, and they've been pretty persistent in terms of their guidance, maintaining the guidance and saying activity is going to pick back up. But they ended up reducing guidance this recent quarter, and they just said they don't see the environment improving over at least the near term in terms of home improvement, things like that. And they had mentioned people just aren't selling their homes, probably because a lot of them have maybe those pandemic rate mortgages.
Yeah.
But I think another thing
Yeah, it's
is like
hard to
people
sell
just,
when you have a
yeah,
3% mortgage.
yeah, it's very hard to sell. I think there's a lot of cracks in the economy showing. Even the GDP, I think they said it was the bulk of it was data center and
Yeah.
AI.
Yeah.
Outside of that, like there was next to no growth. And I think consumers are pulling back massively.
Yeah, yeah, exactly. And I think you're starting to see a bifurcation of spending, even more a K-shaped economy where the rich are spending, but the
Yeah.
bottom 50%, if not more, are not spending much. And I think you're probably seeing that a bit in Canada too, as well. It's not specific to the US. And then that middle portion is getting squeezed and squeezed even more. And it's not because someone is rich that they'll be buying more food. They may be spending more on food, more expensive food, but they're still eating the same volume for the most part. So it's always something to keep in mind. And I guess for Bitcoin too, the last thing is there's not been a lot of new bullish catalysts out there. So the ETF hype, I think that's pretty done. There's not really too much on the regulatory front in terms of technological catalysts either to offset the selling pressure, and the market is waiting for the next big narrative for Bitcoin. So I think it's just a combination of a whole lot of things, and probably also just liquidity starting to get drained in the markets in general. Let's go to the fun side of
Yeah.
things. I did most of these numbers yesterday, and we're recording on November 19th. But since the end of October, NASDAQ is down around 6%, but still up close to 17% for the year. The QQQ, which is a NASDAQ proxy. So that one is up 17% year to date. The S&P 500, similar situation here, down about 4% in that time period, but up close to 13% for the year. Microsoft is down close to 9%, but still up double digits for the year. Amazon and Meta are definitely the two that are struggling quite a bit. So Amazon was down 11% and almost even for the year, just slightly up. And Meta is getting smashed here, down more than 20% and flat for the year. Google
Yeah.
is doing very good here, the outlier. So you're seeing Google is up 50.6% for the year, just massively outperforming. And you'll talk about the news of Berkshire buying a stake into Alphabet, I think probably offsetting some of that selling pressure that we've seen in the last few days.
You're seeing a lot of people talking. I think there's like two groups. There's some people who don't really think this is all that bad at all because, again, the S&P is only down 4%. But then you have some people that are like getting absolutely hammered because they're in a lot of those high growth names, like high valuation names that are, I think it would be an understatement to say they're coming down to earth. Like we did, I can't even remember when we did that quantum episode, but it was pretty much right at the top. I don't even know
Okay.
if it could have
Yeah.
got more peaked than that. Like Rigetti Computing, that one quantum stock, it's down 60% over the course of a month. You're seeing a lot of companies like HIMS that is down a ton. Duolingo is a very popular stock that's getting absolutely crushed. So it's all those higher growth area type companies, whereas like the index itself is really not seeing a ton of pressure. So I think it's kind of a tale of two types of investors. On the flip side, like if you owned a lot of those high growth names in 2025, you probably were absolutely crushing it leading up to the huge drawdowns in these names.
Yeah, so definitely those high risk stocks. We both had an interaction with someone that was very bullish on HIMS, the stock, on Twitter. And I think that was the perfect explanation how the market was thinking at these super high valuation, because you were saying how it was probably not the best decision for the company to be buying back the stock when they're trying to grow rapidly. But this person responded to you, and I just couldn't believe it. I thought it was a joke. They said, well, the valuation's fine. If you look at 2030, it's trading right now one time sales. I couldn't believe it, but it just goes to show the kind of mental gymnastics people are doing, investors are doing for some of these names that are trading at ridiculous valuations. And they're looking 5, 10 years down the line and trying to justify today's prices by not realizing how much of pulled forward growth is actually in today's prices. And the fact that this person would even mention that with the amount of disruption that we've seen in the past 5, 6 years, and Hims is a subscription service based on telemedicine. And to think that any kind of assumptions for this kind of company, which I can think of a lot of scenarios where it gets massively disrupted, whether it's with AI or something else down in the next couple of years, to think that 5 years down the line, the current valuation justify it. To me, that was a perfect tweet to explain what investors are thinking when they're buying these insane valuations.